good morning, good afternoon, good evening to everyone who's coming in right now. Welcome to this webinar on invisible barriers, addressing gender norms for lasting transformation. My name's Ella Duffy. I'm a private sector development specialist with the Donor Committee for Enterprise Development. I support our Women's Economic Empowerment Working Group, and I'm really happy to welcome everyone today. A couple of housekeeping things before we get started. Feel free to use the chat box to introduce yourself and let us know where you're dialing in from. We'll also have a Q&A session towards the end of the hour, so if you have questions for the speakers as we go through, please put these in the separate Q&A box so that we can keep track of them. This is different to the chat box, so you could be able to see an icon in the bottom bar on your screen that says Q&A. If you can't see it, click on the three dots to find it. So this webinar is being recorded, and the recording will also be available for you to share with colleagues via the DCED's events platform after the event. So this has been organised jointly between the DCED Secretariat, DCED Working Groups and the BEAM Exchange, which is the DCED's knowledge platform on market systems development, managed by our Market Systems Development Working Group. And today we are talking about gender norms. So gender norms shape the behaviour of market system actors. They determine how different genders are perceived and treated, influencing everything from policies to business practices. These collectively held expectations and perceived rules for behaviour based on gender identity are often the root cause of women's financial and market exclusion. So the purpose of today's webinar is to introduce the importance of considering gender norms and to show how development actors can pragmatically address these norms and move towards more inclusive system change. So I'm very happy to introduce our agenda and our speakers today to tell you more. So firstly, our CGAP colleagues, Antonique Koning and Nisha Singh, will talk about CGAP's gender norms research, which classifies gender norms by their strength and prevalence. Antonique is a senior financial sector specialist with experience in financial inclusion and gender norms, and she leads CGAP's work on women's economic empowerment through financial inclusion. Nisha is also a senior financial sector specialist and works with CGAP on addressing norms in financial inclusion and climate-related finance. So following the presentation from CGAP, we'll then hear from Sophie Mills of the Financial Sector Deepening Network and Victoria Adoma-Buen of Financial Sector Deepening Uganda, and there we'll learn more about how gender norms are being diagnosed in practice. Sophie leads the FSD Network's Collaborative Gender Programme, which works with 10 FSDs across Africa to support their capacity to deliver systemic gender impacts while building inclusive financial systems in the countries of operation. Victoria is FSD Uganda's intervention manager on rural agricultural finance. She's an agribusiness specialist with experience in agriculture, value chain development, and green finance. So please continue introducing yourself in the chat box, and I'm very happy to now hand over to Antonique. Thank you.
Thank you so much, Ella. Thank you for this wonderful introduction. And it's great to see many of you already joining. The topic is gender norms today, and we know that that's a topic that is on many people's minds. I want to start you off with this image. You see the rooster in the middle on stilts, trying to really fit nicely in with the flamingos. It's kind of funny, but it's also a perfect metaphor for how social norms work. Social norms tell us what's acceptable, what's respectable, what earns the approval, and what people want us to be doing, in essence. Gender norms are a subset of these social norms. As Ella already pointed out, they are these collective expectations about how women and men should behave, and they shape not just the individual's behaviors and actions, but also their families, the people around them, institutions, very importantly, and in our context, the financial system that everyone operates in. So I want to see with you all how this plays out in practice and what really counts as a gender norm with a very quick poll question. And I think, Ella, you can put up the poll question in the Zoom environment. So the question that we have is, which one of those four statements is actually characterizing a gender norm? Is it the first one, women lack collateral? The second one, men are better at managing money? The third one, women should invest their income in the household? Or fourth, women entrepreneurs prefer home-based enterprises? So if we can get everyone to reflect on, what do you think out of those four statements is actually a gender norm? So Ella, I expect you to give me a signal when the results are out.
People are still putting their answers in, so I'll give it another 10 seconds, 20 seconds, something like that.
It's very interesting to see how the voting is progressing.
Okay, you should see the results now.
Great, excellent. Well, thank you. It's actually interesting that a lot of people have voted differently, but the one that stands out is men are better at managing money, the belief that that is the case. And second comes women should invest their income in the household. And I think that's a really nice way of framing it, in the sense that sometimes you can ask yourself the question with gender norms: what if you don't abide with these norms, right? What happens if women, in this case, do not invest their income in the household? Are there certain sanctions? The one that's certainly not a norm, and I want to call that one out, is women lack collateral. And the reason for that is that the lacking of collateral is more a constraint. It's a constraint for women, and it's a visible outcome that actually stems from some of the norms and that are underlying that. So gender norms are not a statistic or a policy. They're the invisible expectations that actually shape the behavior of actors and also result in different statistics and policies. So let's take a closer look at that and how these different things are related to one another. When you look at women's financial inclusion, and that is the kind of focus that CGAP has in this topic of gender norms, we often see what's visible, and that is a constraint. Just as I pointed out, women are unable to provide collateral, for instance, for loans. And that appears like a straightforward problem of access. What we also see is that there is beneath that visible constraint a pattern or a behavior that leads you then to a social expectation. So the behavior could be that women register assets in men's name because they're not allowed to do it in their own name, or lenders systematically prefer male borrowers or require male guarantors for certain loans to women. That is a behavior of the women and a behavior of the financial service providers. We continue to ask ourselves, why is this? What is driving that behavior of the different actors and the constraint? And that is this expectation that men should own and control family assets. That is the norm in this case that is driving all that behavior. So we should keep on asking ourselves, why are things not happening the way that we want them to happen? And then we get to these root causes that Ella also mentioned. So every visible constraint really hides a social expectation that shapes the behavior of all the actors in the system. Not just the men and women, but the financial service providers, the policymakers, the credit bureaus, etc. So if we just design around a visible constraint, for instance, we offer collateral-free loans, then we might improve access to financial services or to loans in this particular case temporarily. But unless we also shift the behavior that's underneath that, which is caused by gender norms, the barriers will not really be removed, and they're most likely resurfacing in other forms. So it's really important to get to the bottom of that. this is the key. If one takeaway from this webinar you should have is really that gender norms are systemic forces that shape the behavior of all actors in the market. What we oftentimes see is the logic that gender norms are affecting women's financial inclusion and therefore we need to do something with women. But in fact, it's because of all the other actors in the system, their behavior we need to question really. CGAP has developed a tool to uncover gender norms and how they actually shape different market actors. And that's the document that you see on here. And we'll also be sharing the link to that, which really offers practitioners a powerful set of tools to dissect this relationship from the constraints to behavior to the underlying norms. And in fact, there's also a lot of practical tools in the annexes of this document that can help you with draft terms of reference, interview guides, data collection framework, because we do think it's critical to diagnose gender norms, because that opens the way or helps us identify where we can intervene as facilitators in a market, and whether we can actually shift expectations itself, or we have to design incentives that reward new behaviors, for instance. So with that, I will hand over to my colleague, Nisha. Nisha, over to you.
Thanks, Antonique. Good afternoon, good evening, everyone. So picking up from where Antonique left off, as we were developing the diagnostic guide, we started to realize we needed a way to frame our findings and develop a framework for classifying these gender norms, because it's not enough to just say, vague statements like gender norms are strong, and so, you need to do something about it or you cannot do something about it. And the way we thought about the classification framework is to specifically look at two elements, prevalence and strength. And what do we mean by prevalence is the extent to which a norm is widely recognized and adhered to by the different actors in the system. So do all of the different actors actually believe that this is an expectation that they have about behaviors of men and women? And then the strength brings forward the concept that Antonique mentioned, which is core to a norm, that when that collective expectation is not met, there is a sanction. There is a usually negative reaction if you don't adhere to those norms. So strength is about the extent to which norms are rigidly held and severely sanctioned if the norm is broken. And by plotting the norms, that we discovered through the diagnostics, we were able to create this classification. So, Antonique, you might need to click a few times as we go through each of the types of norms. So, when the norms are highly prevalent, held by a lot of people, and the sanctions are really strong for violating the norms, those are deeply entrenched norms. And then you have norms that are not so prevalent, so not everybody believes that these norms need to be adhered to, but there might be some actors or a small subset of actors who still believe, either at the community level or within policies, that this expectation needs to stay in place. So then you have shifting norms. The next one is flexible yet widespread norms are where a lot of different stakeholders might believe that this norm should be in place, but the sanctions for violating are not that strong. So you're already seeing the norm not always adhered to. And then the fourth one is when the norms are relaxing, where there is low prevalence and low strength. And the reason we look at these dimensions and this classification framework, what it really tells us is that not all norms might require the same type of intervention. It gives us some practical entry points of understanding whose behavior might need to change for the constraint to be eased and therefore promote women's financial inclusion. So based on this classification, we develop corresponding strategies for addressing norms. So for norms that are highly prevalent and high in strength, um, because the sanctions are so severe, it might be easier in that case to work around the norm as opposed to trigger sanctions where you might create any unintended consequences for women. The second strategy around norms that are shifting, where I said the idea is that often there might be one group of actors or stakeholders who might strongly believe that the norm should stay in place. So it might be about aligning the expectations and bringing it on par with the other actors in the system by tailored interventions that change their behavior. For flexible yet widespread norms, because there is already change that is happening, this presents an opportunity to highlight those changes. And we call this leveraging this idea of positive deviance. If there are actors who are not following the norm, can you showcase them and their behavior to role model it to others? And in the case of the last one, which is where the norms are already relaxing, can your intervention then reinforce that transformation and accelerate the pace of change? So these are four practical ways of translating those diagnostic findings and finding ways of who do you work with, what can you do with them. And to illustrate this point, if we can go to the next slide, Antonique. Um, Oops, yeah. We put all of these insights on how do you classify norms and then how do you identify entry points, and did a bit of a mapping of existing examples into this second publication from CGAP that provides a bit of the framework, but also then practical examples from financial service providers, policymakers, supporting function providers, different stakeholders. How do they intervene to address these norms? And I'll just very quickly walk you through one example. So this is an example that is documented in that publication, and this is from a project in Mozambique, the WIN project, where in the context of women entrepreneurs in Mozambique, some of the norms that were at play were women should not run large businesses, and women should not invest. Women should invest all their business income into household expenses. And while these norms were at play, there weren't severe sanctions for the women who were already either running businesses successfully or, investing their income into households. So this was a highly prevalent norm, but the sanctions weren't strong. And so the project's strategy really focused on showcasing those women that were already running their businesses using, a character called Jeanette. And this was a radio program. So it allowed the project to reach a wide audience and promote this idea of how women are running businesses and what are the positive effects of that. So that's just one example of how do you translate this framework into practical intervention strategies. And can we move to the next slide, please? Yeah. So building on that, we have a much more detailed guide on designing interventions, because following the market systems approach, where we have the findings from the diagnostic, but then how do you begin to understand, map out what Antonique showed in terms of that constraint, behavior, what are the underlying norms, how do they, shape the incentives and capacities of these different actors, and based on that, begin to think about interventions that will change either those incentives or build the capacity that is needed to address the root causes, which is gender norms. So I will pause there and see if there's any immediate clarification questions in the chat. I think there might be a couple. I'm just trying to get to the chat. Uh, so the question is, the framework for mapping prevalence and strength looks very useful. What about relative severity of detrimental impact? Would this almost be a third axis? The severity is actually built into the framework. That's what the strength is about. And one core component of that is looking at the types of sanctions that are, might come into play if the norm is violated. So you don't necessarily need a third axis. I don't see any other immediate questions. So maybe we can move forward with and come back to this. I think might need a little bit more time, and maybe this next part of the discussion will help make this a little bit more real. So I'm going to pass it on to Sophie Mills to talk a little bit about how this played out in Uganda. So Sophie, over to you.
Thanks very much, Nisha. Not just me, but also Victoria. Thanks, Victoria, for joining. So I think we've both been introduced already, so we can jump straight into the conversation. FSD Uganda team with Victoria were the first FSD to test this diagnostic. So we thought it would be interesting to hear from Victoria on how FSD Uganda saw that experience and some of the insights that could be useful to share if there are any of you on this call who are interested in what it entails to do one of these diagnostics. I guess the first question, Victoria, very sort of simply is, what was the motivation for FSDU to do this? You know, I know we kind of approached and offered the possibility of participating, but it'd be good to know how FSD Uganda saw that invitation internally, and what prompted you to say yes?
Thank you, Sophie. Pleasure and a privilege to be here, and really happy that we're the very first FSD to start on the diagnostics. So we're a learning partner. To be quite frank and transparent is we had a funding opportunity to carry out the diagnostic. So, and it really aligned very well with the current project we are working on, which is focusing on young women and financial inclusion in a part of the country. Another really important thing that motivated our team was we wanted to learn more about norms. It was a word that was thrown around a lot. The team was aware of it, but we didn't really factor it into program design. And FSD has a lot of research and market insights, but we didn't have a tool for understanding the norms. So we knew what the probable impacting behavior would be that has been seen in the market, but we didn't know how are they impacting, which norms are the most prevalent and strong. So those were really a strong motivation from our team.
Yeah, thanks, Victoria. And I think that resonates as well with something that the FSD Tanzania team, who started the diagnostic shortly after the Uganda team did, you know, they very much like you, they said, well, we knew that norms were important, and we knew all of the norms that came up, but what we didn't have was a methodology that allowed us to prove the importance of these norms to market actors. Thank you. I know that Nisha just talked about the publication, which sets out, you know, the guide sets out in a great deal of detail how to do a diagnostic. But from your perspective, you know, what would you say are some of the key considerations for a team running the diagnostic? What makes for a successful diagnostic?
We know financial inclusion is shaped by an ecosystem. So what is really key to consider are around three to four. The very first one is being able to identify a full range of stakeholders the ones who need to be involved, like it's a must for them to be part of this, part of the diagnostic. The young women, the banks, but then go a lot deeper. Who are the gatekeepers of the young women? If you're talking to the bank staff, what levels of the bank staff, right from those that engage with the young women at front desk to field level, then to right up to the decision makers in the institution. Open that up wider to the regulators in the community, or even further to countrywide. Who are the regulators when it comes to decisions around financial inclusion? Bank of Uganda, Ministry of Finance, and then, of course, most importantly, the family members to these women, and then their sponsor partners. So just open up the list of stakeholders because that really influences the outcome of what the diagnostic would be like. So you don't end up having to only speak to the end user and the financial institution. You will end up missing out half of the story if you don't open up the list of stakeholders you have. That is one. Another really important key thing to consider would be identifying the norms that matter. I will speak to our experience as FSD. On our end, we just throwing around the ball, we're like, I would really assume women not owning land would be the go-to norm. That would be the one that I've seen most. But the diagnostic actually opened our eyes and said, wait a minute. It showed us that actually women not having financial privacy from either their spouses or household members was actually the most strong and actually the most prevalent. So we had to also, it's really important for you to identify which norms matter. Because for this diagnostic, we really looked at only one region of the country. And now that also told us that it's really important to reinforce which norms matter. And while you're mapping out what those norms are, it's important to have the evidence and then not just have the assumptions that you may have. Thirdly, test out the list of actors you have, the stakeholders I mentioned earlier. And then, of course, being able to keep refining the norms, because you do want to go to the field work of the diagnostic of the study when you actually have most of your information intact, and then not have a lot of backtracking with all of, or maybe we did miss this out. Maybe we may need another focus group discussion to get insight on something else. Then fourth, you need a local research firm. A local research team is really, really important because they have experience on the qualitative research, even the methodology that you may end up using, the vignettes that you may use out in the field. As you did the testing earlier on, it's important that you use the local research team, because when it comes to norms, you're not going to have a question and answer kind of atmosphere. You need to be able to get out the actual thoughts that your key informants may have, without it seeming like it's sort of like an interview of a back and forth. So it's really important to have that in mind. And for FSD, our focus has always been on women's financial inclusion. But the diagnostic actually showed that it goes further to women's economic participation. And that actually now even became more relevant to the program we are delivering with MasterCard Foundation. So those are really key. Thank you for that.
Yeah, that's great. Thanks, thanks, Victoria. FSD Uganda was the first FSD to do the diagnostics. So, you, me, the CGAP team, we're all kind of learning by doing. Could you share just a couple of insights around how to ensure that a norms diagnostic is as useful as possible to broader work? I know that you'd had sort of you guys moved the sorry, I have random things popping up on my screen. Yeah, just in terms of, if you were to do it again, is there anything you do differently? Are there any learnings that we could share out with colleagues on the call?
Yes, most definitely. We had a lot of learnings throughout the diagnostic. It took us about 6 months of everything from contracting to actually having the report out. But it's really essential to have the diagnostic right at the design of the program. It seems less obvious, but it's really important because on our end, when we partnered with FSD Network and CGAP, the program had already been designed on our end and we had already begun implementation. So there was a lot of learnings that the diagnostic gave us, that we had to have a lot of pivoting to try and utilize the diagnostics insights. One of the most important that came out to mind was the women should not own large businesses, okay? On our end, that didn't even seem to be something we thought would come out very strongly, as it did. But one of our partners in the program was able to utilize those insights from just that one no. Because in the way they were actually doing a community entry for the program, they were actually targeting bigger businesses. And in most of these businesses, they were being owned by men. And the women were very minimal. So we had always had a question like, why aren't we getting traction on this? So when the insights came in, we had to pivot and we had to change how we actually the approaches we're having for the program, where now we had to get the women in the small businesses, similar small businesses, and actually put them in groups where they can be able to actually make decisions together and be able to grow that business to the large businesses. Sort of utilize one of the designs that Nisha and Antonique shared earlier on, be able to sort of circumvent what that was like, and then reinforce the fact that they can actually own large businesses. But before we get to one single woman owning that large business, how about we got this several to own one big business and then slowly scale it to each one? Yeah, that was really important because to get the insights from the diagnostic owner and really showed that for you to do any gender inclusive or gender focused intervention, you need to have the diagnostic right at the design phase, because all the interventions that you will have planned actually help, it gives you those insights on how to actually do all the necessary approaches and the strategies and how the business models can actually move. So it saves you a lot from designing on assumptions and instead use evidence to design.
Yeah, thanks, Victoria. And it's also good to know that even if one does start the process a little bit late, that the insights can still feed in and you can pivot and adapt. I'm just keeping an eye on the time. I think we've just got time for one more question. So I wanted to ask about how the findings impacted FSD Uganda's work more broadly. Obviously, you applied the findings of the diagnostic to a specific program that you were in the process of implementing. You were able to pivot. But more broadly, in your role as a financial sector facilitator, have you got any insights you could share around how the financial ecosystem received, the findings and anything that surprised either the sector or FSDU staff? Thank you.
Yes, we really had an interesting response from the sector, especially around the norm that came out very strongly and very prevalent on our end, which was women should not have financial privacy from men. They all knew, all the actors in the room knew that women hide property, and they did not. They were actually really surprised that the reason why they were hiding property was because of the fact that they did not have financial privacy. So that was like a light bulb moment, like, so this is the behavior. This is why this is happening. So they knew what the problem was. We just didn't know what was the source of the problem. So it was really helpful, and it helped them trigger a lot more thinking on how most of the norms that came up were. So it was also really important to draw the line from how harmful the norm would be to the financial sector traditionally, to how it could actually, if circumvented or aligned to certain expectations, how that could open up a lot more business for financial service providers. But it was also a self-reflection for some of their staff who were in the room, because they realized, wait a minute, I may actually have a bias, conscious or unconscious, about the decisions that I make around a woman who has come to apply for a loan. Probably the way I will make that decision on the fact that she's a woman. Case in point, if a young woman and a gentleman all came to apply for the same amount of money and the same business, there were very high chances that the woman would get a lot less money. But that was what got them to say, wait a minute, I could actually be having an unconscious bias towards lending to a woman. So those norms were things they knew. They knew the behavior, they knew what the constraint is, but the diagnostic actually helped show that there was actually a source to most of what these constraints were. And that helped them realize that they needed to now design with that knowledge in mind and even relate more with their clientele with that knowledge in mind. So it wasn't just about the unconscious behavior, but also on our end, as we're designing the interventions around that, it showed us that most of the stakeholders, the financial service providers and the regulator, didn't actually know what these norms were. So we're like, okay, that means we need to design around just as simple as just an awareness to know that this is what the norms are, this is what the impact is. So any decisions made around that would actually help with the knowledge of what this norm's impact is.
Yeah, thanks so much, Victoria. And I think that's a really nice point to end on, that this isn't, this work is not necessarily about modifying women's behavior, but it's around how are norms impacting the way that other market actors relate to and provide services or don't provide services to women.
Yeah.
And that's what we've really been trying to get at. I know we're at time. Thanks so much, Victoria. I'm going to hand back to Antonique because I can see you on my screen, so I guess it's you.
Exactly.
Thank you
It's
so
me.
much. Yeah.
Thanks so much, Victoria and Sophie, and thank you, for really illustrating this very practical application of the tools. And it's been great working together with you, as you said, learning on the go. I just want to conclude before we open up the Q&A with a couple of final observations from our side, and just 4 key recommendations, and you've heard them throughout, so I'm not going to spend too much time on it, but we really strongly support the idea of conducting or leveraging a market system gender norms diagnostic. And this doesn't necessarily need to be a standalone effort, which was the case with FSDU. Ideally, you do this as part of the process that you go through as you design programs, right? And so you could integrate that. You could also leverage, of course, information that you already have. But what is important is this point that Victoria rightly highlighted at the beginning, to have a good scope of the ecosystem and really involve all the stakeholders that are needed in that. The second point I want to highlight is this notion to examine and transform institutional practices. It's the point that Sophie ended on. Oftentimes we're orienting towards women, thinking it's the women and their gatekeepers, something needs to change there. But in fact, the norms are also affecting other market actors, and it's their behavior that first needs to change before we even turn to opening opportunities for women themselves. Thirdly, design system-wide interventions, and I think this is why it's so great to have this session here with colleagues that are all participating in the DCED. You already have a market systems focus and approach in your practice, and so I'd love to hear now in the Q&A time also some of the ideas that you might have or experiences that you might have to offer system-wide solutions in those circumstances. And then last but not least, I do want to highlight, and there's a short portion in our designing interventions guide that touches on this, is the measurement part. We do think it's important that we start measuring institutional change alongside individual outcomes, because we know that tracking how interventions transform market active behavior will help us to identify what are the actions and interventions that are most successful or work best in given circumstances. Of course, context is always key, but we can learn a lot from different experiences. And a final note I want to point out is that gender norms are already evolving. So don't see this as a taboo topic of something that you can't do anything about. I think the really critical question for us, at least in the financial sector, is will the actors in the system serve as active agents of positive transformation, or will they passively perpetuate the constraints that already currently limit women's financial inclusion and their broader economic growth? So we hope that our resources give you some inspiration, including the annex with the illustrative examples that Nisha mentioned. And I'm happy to open up now the discussion and see where we can take this. This is as much about us learning from you as us sharing with you. So with that, let me go back to the Q&A space. I think there was already one question in the webinar chat, so maybe we can address that before we get to other questions. There was the question from, so Simon's question, Nisha already addressed. Then there was appreciation from Ariola, which is fantastic. And she highlighted the point about needing experienced and invested staff to work on these issues, which I totally agree. And I think with Victoria's explanation, you could hear that. It's also one of the things that we've identified as a critical point with already starting from the diagnostic of doing these diagnoses. You can't just hand this over to a bunch of consultants. And I'm not saying all of you do that, but oftentimes this is, as a result of capacity or bandwidth, this is what happens, and then you get an end product. With these kind of studies, we would strongly advise the team that is going to intervene and design the intervention to be strongly involved as the process goes on, because you learn as you carry out the diagnostic. Desiree asked a question about business models for women smallholder farmers. And Desiree, I did put a response already in the chat with actually a link to other CGAP work that's exactly focusing on business models for smallholder farmers. So I hope you'll find some answers there so that we can turn to some of the more specific questions. And maybe Nisha, I'll turn to you for the next question from John Golakai Davis about the practical experience that we can share about how you prioritize which norms to focus on, and how to highlight the importance of the insights and help to bring those to life. Can you take that question maybe, Nisha? And then that's, I think, the end in the chat, and then hopefully we can go to other questions in the Q&A. But Nisha, why don't you take this one from
Yeah, sure. So
John.
in terms of, prioritizing which norms should come first, it's a sequencing question. And I think part of the classification framework is supposed to help you do that. Like by mapping out, you're never going to come out with one norm. What you'll come up from seeing the diagnostic is usually 4 or 5, maybe more norms that you focus on and understand that, where they are in terms of relative strength and prevalence for the different actors. And then it's a choice, when you get into the intervention design about, okay, which of these norms link to which of the constraints. So you're not actually prioritizing the norm, but often what you're doing is prioritizing the constraint that you see as the most pressing for your project. And from there, then decide, okay, is it feasible for me to intervene, to change the behavior of the actors that are affected by that specific norm? And you might realize, this is a very deeply held norm. It's high strength, high prevalence. So can we prioritize something else where there's already relaxation happening and indirectly then get to the change? So, and all of this, sequencing is sort of explained in the intervention design guide, where once you prioritize your constraint and then think about whose capacities and behaviors need to change, then you can define your intervention strategy. I hope that that answers the first part of your question. Sorry. I'm not sure the second part of your question about how did participants react to these norms during the diagnosis phase. Which participants you specifically mean? I think from what we heard, and maybe Victoria can talk, when these diagnostic findings were shared within markets, what we've heard is, sometimes they were really revelatory to the market actors also, because, they highlighted facets that people may not have thought about, and it was a good way of beginning to create a shared understanding around some of these constraints to women's financial inclusion. I'll stop there and see if there was other questions.
Thanks, Nisha. And Simon encouraged everyone to read the design guide, which actually uses the outcome of the diagnostic in Uganda, which Victoria also put in a link to in the chat, and I put the link to the design guide that Simon rightly encourages everyone to look into. I think we can probably, Ella, I think we can move to the Q&A section, right? Because there are questions in there, correct?
Yes, please do.
Okay, good. And those questions are 2 questions from Mika. So she is asking, when measuring, do you focus on change in norms or more on changes in the behavior of actors? That's a very good question. And who wants to take that? Victoria or Sophie or Nisha? Do you want to speak? Maybe Victoria or Sophie, from your practical experience, what did you focus on?
Yeah, Victoria, I'll let you come in whenever you want to, but I'm thinking from the FSD perspective, I mean, it would be wonderful to say that we were focused on the change in the norm, right? But I suspect that we are focused on the change in behavior of actors, specifically looking for improvement in women's financial inclusion. And from our perspective, I think we want to be aware of which norm is impacting that behavior. We want to be able to classify it so that we have the appropriate strategy for working with it. And in some cases, that strategy might be we just don't work with it because it will consume all our budget and nothing will change. If it's a very sticky, entrenched norm, that's just probably realistically not something that we can do. And then what we are doing is we're designing interventions that are taking that norm into account, ideally working with other stakeholders who are also working on those issues, because I don't think any one entity can take on, a norm. And looking to support market actors to change their behavior, that they understand in the same way that Victoria was talking about, the way that understanding that financial privacy was driving some of the behavior that FSPs were seeing. How do we work with those FSPs to ensure that they are more responsive to that reality? But Victoria, I don't know if you want to add to that.
Yes, please. Yes, I'll just add to something you just highlighted. On our end, we also were handling on changing the behavior that was resulting from the norm. Case in point, women being able to only speak primarily to their families about business decision. So on our program end, we mainly had to also make sure that to work with that behavior, we had to change our approach, our intervention to now become a household approach, which now actually helped us even get the traction that we're looking for. However, from also a program that the government was also able to start in country, we started to see a change from also the FSPs, but also sponsor partners on around land ownership. Women should not own land or have assets registered in their names, because this program actually was targeting mainly women. And for how it was designed, a woman needed to own a piece of land to be able to access very cheap credit. However, we realized a behavioral change where spousal partners were now actually withdrawing their agreements, land agreements, and actually now changing, even including the women in that ownership document, or even going further to talk to the institution together with the woman, or because they are now working as a family to make sure that they are able to access this really very cheap credit. So that was a behavior change that was seeing, and we're like, so that means women ownership of land is something that actually isn't really as deeply entrenched with time as we see most of these programs starting to come up. I hope those insights help.
Thanks so much, Victoria. I think those are really good questions to, or answers to Mika's question. And Mika has another question asking about the experience that we have with the timeline of changing norms, especially high strength and or prevalence norms. Mika, I think to that question, it's all context specific and dependent, right? One example that you may have heard quoted before is how in some context, all of a sudden, as a result of COVID, when a lot of the normal channels of interactions fell away, there was more lenience for women to have mobile phones in areas where before, having a mobile phone or using a mobile phone was out of the question because of certain expectations or negative connotations to the use of a phone or social media, etc. So in that example, you saw almost within a couple of weeks an immediate turnaround. In other examples where you see a lot of male participants in the economy leaving for migrating to other areas to find jobs, for instance, all of a sudden women need to do things that they weren't allowed to do things to do before in the economy. So it really depends on what the situation is and what other factors are playing a role in that context. But what we have identified in our framework is those norms that we already see changing somewhat, you can push a little further more easily than those that are more entrenched. So I hope that answers your question. Let's get to Simon's question. And Simon, again, I see you're a big fan of, of the initiative and of the framework, so that's wonderful. And you're looking for guidance on how to maximize leveraging the positive deviance, keeping in mind also that this needs to be done responsibly and minimizing the risk of potential unintended consequences. I don't think we have like a strong evidence base for what works when and how. I'm sure there are multiple experiments, but I haven't seen any kind of rigorous study yet on what works in what particular context. But I think I don't know, Nisha, if you have any thoughts on guidance of points of contact that exist. I think we have in our illustrations a couple of examples of these positive deviants that give some positive illustrations and have reached some positive impact. But I don't know if there's any kind of robust evidence of that so far. Nisha?
Yeah, I think the evidence base is still pretty thin in the context of economic empowerment. There is more, of an evidence base around behavior change campaigns more broadly that have leveraged, this idea of positive deviance, whether it's in the health field or, nutrition uptake. So looking at that as a corollary can give us some insights on how do you design these kinds of approaches with, the right set of insights. And in terms of unintended consequences, I think this idea of if you do the diagnostic right and have a really strong understanding of what the sanctions are, what might be the triggers of those sanctions, and then that can really inform your design for the intervention itself. And one example that we mentioned in the focus note is the one from Kenya, which is I think Shamba Shape Up. They've done, where it's financial education, but also around women's roles in agriculture. And that was a project where there was a experimental evaluation sort of done alongside it to understand, what were the changes. So there is, when it's done right, it has shown pretty strong evidence, but it requires people who have the right expertise in designing these interventions carefully to work on them.
And maybe I can just add, in addition to that, there were some campaigns that were supported following a diagnostic in Tajikistan and Kyrgyzstan, supported by the IFC, and they have done some analysis afterwards that kind of evaluated change happening. And I think one of the conclusions that they had was that because this was within a time frame of a program that IFC had, the time was actually relatively short to do the evaluation of what has worked and what has worked less. But we can share with you the link to those resources at least. That's one example that actually was evaluated a little bit more closely. But I think, in fact, this is an extremely interesting area for further research. And I think, especially as more and more organizations like all of you on the call are taking actions, designing interventions to put a framework around it that allows you to monitor what actually happens in the change of behavior over time, could then help us to collect more information in a couple of years' time, I would say, that guides us more in terms of what can and what can work and what can not work not so well. Just like Nisha said, in other sectors, they've been at this for a far longer time than we in the financial sector. So I'm glad to see that there's a lot of interest now to in our sector also to take this on. Are there any more questions? Ella, maybe you could help us to see or navigate if there are any further questions that we have to address or that we haven't spoken about yet.
No further questions in the Q&A right now. We've got time to take one very short question if there's any burning question from anyone still. Otherwise, good to see that the links are being shared in the chat, but also to say we'll send an email afterwards with the recording of this webinar, and I'll make sure to include the links to all the resources mentioned today.
Okay, can I then use one last moment to do some advertising maybe?
Sure.
Because we have, CGAP has a community of practice on women's financial or women's economic empowerment through financial inclusion. It's called FinEquity. And FinEquity is launching a dialogue with practitioners in the sector, like all of you, on gender norms. And it's going to run from Monday next week until International Women's Day, 2 weeks later. I've just put the link in the webinar chat where you can sign up for the group discussion, and you will find all of us, I think, back there as we dialogue, as we find more experiences that people have in our sector, but also questions and answers from colleagues. This is a dialogue that we're continuing. So I'm very glad that this is happening before that dialogue, because it actually allows us to bring people like yourselves into the conversation, and very much look forward to that. And in addition to that, Ella, I think you have an announcement about the next webinar.
Yes, exactly. So this was part one of a two-part series, and we're doing in a couple of weeks a 90-minute workshop hosted by the same group, and we'll take participants who register for that through some really practical exercises to apply the learnings from today to your own context. So this is really specifically for any intervention managers who are in the webinar today. There'll be a really interactive practical workshop. So we'll drop the link for that in the chat as well, but you can see that on the DCED's online events portal listed where you found this webinar. Great. Any final words from any of our speakers before I say thanks?
Maybe just to say thanks to all of you. Very interesting questions. I'm glad to see that there's good interest from the DCED community, and we're very happy to continue the conversation, as I mentioned before. And I just want to say thank you to my fellow colleagues on the panel.
Exactly. Thank you very much to all of you. It's been really great to organise this webinar with CGAP and with the FSD network. So really looking forward to the next webinar where we'll really dive into those practical exercises. So thank you for the rich insights, practical considerations, and thank you to all the participants today for your questions and comments in the chat.
Thanks,
Great.
everyone.
Thank you. Goodbye.
Thanks, everyone.
Bye.
Bye.